Social Security is complex and it affects almost everybody. It gets even more complex when you start talking about collecting Social Security while you're still working and how it's taxed and how all of that stuff works. I'm going to break it down for you today. I'm going to keep it simple. I'm going to try and keep it short. I'm going to try and do this video in under 5 minutes. At the end of it, you'll know all about how Social Security is taxed. Here we go. So the first piece is not actually a tax, it's a penalty, but it's the one that most people think of. If you're collecting Social Security before your full retirement age, there's a limit on how much you can earn before they start to penalize you. In 2024, that limit is $22,320. If you are working and earning more than $22,320 and you've decided to take Social Security benefits early, meaning sometime between 62 and your full retirement age, for every $2 above that limit, they're going to take away $1 of the Social Security check. They're not going to tax it. They're going to penalize it. They're going to take away $1 of the check. So let's use some round math. Let's say that you were $20,000 over the limit. So I guess you would have earned $42,230. 20 grand over that limit, and you were receiving Social Security and you were before your full retirement age, they're going to penalize you. They're going to take away $10,000 of your Social Security check. Now, that happens down the road once they figure it out. See, they get the information from the IRS about what your earnings were, what you paid into the system, etc. And if they're like, hey, this guy's drawing income from the Social Security system and still working, and guess what? They exceeded the limit, we're going to penalize you. You're going to get a letter in the mail, and they're going to say, we're reducing your benefit going forward to get our money back because we gave you money we shouldn't have. So not really a tax, but a penalty. That's the big one. I'm going to make the 5 minutes thing a little bit tougher on myself. My name is Antonio Sabella. If you're new here, the channel is to help folks who are planning their retirement or who are already retired exist in the weird financial system that we have. One of the weirdest topics is Social Security, so I got a lot of videos about that. While you're here, subscribe to the channel. Come on back, visit us another time. And if you're interested in getting stuff like this right in your email inbox, check out the link in the description. You can sign up for our Timely Insights email. We send it out a couple of times a month, just sharing stuff that's going on in the market or with folks who are planning their own retirement. The second thing, what if you've reached full retirement age? And so now you say, okay, time to start to draw the Social Security. I've reached full retirement age, but I'm still going to work. I'm going to kind of double dip. I'm going to take advantage of the system while also still working and earning a living. Maybe you need to, maybe you want to, but either way, you're still going to be working and getting Social Security. Different rules. The $22,000 thing no longer applies because you're full retirement age, but depending on how much combined income you have, they will tax your Social Security. Not a penalty, but it will be subject to tax. Those amounts are also pretty low. I'm going to pop a graphic up here to show you if you're a single filer and you earn at least $25,000, it's going to be somewhat taxed. 50% of your check would be taxed. Once you hit $34,000, 85% of your benefit is taxable if you're earning at least $34,000 as a single filer and your full retirement age and you're getting Social Security. That's a pretty big hit. If you're married and you're filing a joint return, the numbers are a little bit higher, but they're still not good. Over $32,000, the Social Security check is going to be taxable. Once you get over $44,000, you're going to hit that higher tax burden. So now 85% of your check is going to be subject to tax if you're married filing joint and you earn above $44,000. Last bit of business, hopefully I don't go over on this. I mentioned combined income. Your combined income is a weird calculation. Remember, they like to make this stuff confusing. Combined income isn't really a thing that exists anywhere except for when Social Security is deciding how much of your check would be taxable. The simple version of combined income is it's your adjusted gross income plus any non-taxable interest that you earned, think municipal bonds here, plus half of your Social Security check amount. If that amount, those three things added together, exceed the numbers we just talked about, you're subject to taxation on your Social Security check because you've quote unquote earned too much. So you're going to have to pay taxes on that Social Security. I know that it's goofy. I know that you literally pay taxes into the Social Security system to get a check. And so for them to turn around and tax the check that you're getting seems wrong. Whether it seems wrong or it seems right, it's the way that it is. Now you know all about Social Security taxation. If you've got other Social Security questions, good news. I got lots of answers for you. Here's the Social Security playlist. Tons of videos on the channel about Social Security and how it works. I'll see you on the other side.